Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. And man, it's Monday. I have the Mondays. I don't know about you guys. I have the Mondays today. You know the Mondays. Hold on, really quick. I got some. Stand by. Okay. Yep, it's the Mondays. I got the Mondays. All right, but that's not going to stop us from getting our analysis done. So let's go ahead and get to it. So what we're going to start with is what we normally start with is the euro dollar. So let's get over there. By the way, I hadn't been in the gym. I kind of avoided the gym the last couple of months, and which is not like me, but it was. I think it's just me more or less getting used to this this schedule. Getting up really early in the morning schedule, so it's kind of dissuaded me from being in the gym. I can barely lift my arms right now, so that might be part of the Mondays where my arms hurt so bad I can barely lift them. Anyway, okay, so the euro dollar hasn't changed a whole lot from last week. As you guys know, we came off of the 7-8 days of consolidation, all these dojis here, and then we broke down, hit the 38% retracement, or really close to, and then we bounced back. And as we talked about last week, you're just looking for a move back above 113 to 113.30 for short. So if you guys are looking for shorts, this is where you want to be looking for, right back up to 1330, 113.30. Personally, I added back some euro dollar when we were here last week at 113.08. My cost average in my euro dollar short right now is 113.39. Okay, so if we get up towards 113.30, you have to use this as an opportunity. You have to use this as an opportunity to be on the short side. I know we've said this, for the last couple of days since Thursday, but yeah, that would be the previous support, should act as current resistance. Support right now, as we talked about last week, even if we broke through these lows, you can see these lows right here. I had told you guys that you have to be very aware that we have a 38% retracement, this dotted line right here, that is going to be support. So even if we broke into new lows, I wouldn't be overly excited about, oh look, we broke into new lows. Just be advised that there's the support right here at 112. Well, we're going to write down 112.20. Okay, so those are our ranges if you're trading the euro dollar, meaning that we're getting closer to resistance. So for those of you that are looking to be on the short side of the euro, look where we're currently at. I mean, we're almost there. Let it creep up another 10 pips or so, and then take advantage of that. 112.20. I don't think there's going to be any or enough news flow today at this moment, to break us through 12.20. So for those of you that are like, well, I'm short the euro and I'm expecting dollar strength from here. Great. If that's the case, if we get back down to 112.20 or 112.30, I wouldn't expect a breakdown today. I don't think there's any particular news that's going to drive us through there. That doesn't mean that we can't. I mean, we could be sitting here today and all of a sudden gold, just falls aggressively, and then it really pushes the dollar up. I mean, it's quite possible, but I really doubt we're going to pop out of this range. And even if we pop the 113.30 level, it might take us to 113.50. I just don't see the I just don't see like a reason for us to get really aggressively volatile today. So, now that we're inching our way up towards resistance, I think you guys should start looking for shorts in the euro. If you're not already short, start looking for them around here, maybe all the way to 13.30. Okay, let's talk about the cable. Okay, from what I understand, campaigning about the Brexit is going to be starting very shortly. Okay, so you're going to start seeing a lot of volatility in the cable, in my opinion. Now, as you guys know, I have a lot riding on the cable right now. I am short the euro pound. Okay, and the euro pound has been, grinding a little higher, back up towards 80 pence. For those of you that are looking for shorts around 80 pence, I think you might get that opportunity as early as today. But the cable, if you take a step back, we've been looking at the possibility of having this inverted head and shoulder pattern. Okay, shoulder, head, shoulder. Now, I haven't completely ruled out the head and shoulder pattern or the inverted head and shoulder pattern, but the right shoulder that we're currently developing is a little long in the tooth, so the symmetry is not quite there anymore. If we do get a breakout here, okay, of the pound dollar, let's say we break that resistance eventually here in the next couple of days, you know, I don't know if I'll measure it the same as if I would have with the head and shoulder pattern. I'll probably just be looking for some sort of retracement, right? Um, but I will tell you this, okay, that a move outside of this triangle is probably going to be pretty decent. One of the other things I'm a little skeptical about the cable right at this moment is the euro. As you guys know, I think the euro is on its way back below 112, maybe closer to 110. As you all know, that the dollar, which what happened to my? Oh man, hold on, give me 1 second. Stand by. Give me 1 second. I'm just grabbing my dollar index chart. Well, that's here. Okay. All my drawings have disappeared. It's okay. We get to redraw. As you guys know, as far as the dollar goes, I'm looking at this descending wedge. Okay. Okay, and the dollar is, trying to make its way higher. If the dollar makes its way higher, which I think it will, the cable may succumb to that pressure, because if the euro pulls back below 112, I mean, the cable more than likely is going to be, dragged down with it. The only issue that the cable has is obviously a lot of talk about Brexit. There's a lot of polls that say that voters are now starting to sway towards the stay vote, which and it's always been my opinion that when push comes to shove, and you get down towards the wire, the voters in the UK are probably going to get cold feet and saying, well, I don't know if we're really comfortable leaving the EU, as much as there's reasons to consider it. I think that the people of the UK are going to end up voting to stay, right? That's been my opinion the whole time, and I think that this is is quite possible, which would mean that you might get that divergence where the euro falls, euro falls and the cable rallies. But right now, ahead of the Brexit vote, the cable may be under pressure if the euro comes under pressure. Okay, and I think that's quite possible. Okay, so anyway, with that being said, let's go back over to the pound. 141 is support, obviously. That's Captain Obvious right there. All right. So 141 is going to be support, because I don't know if my trend line's drawn correctly. I mean, my trend line could very easily be like this. This could be the one the market's looking at, right? So, or it could be, highlighting or marking the tips. Regardless, I think 141 is going to be pretty big support if you're looking for a place to be on the long side of the pound. All right. Now let's go over to the hourlies. So I'm going to write down 141 support here. Resistance. $618 comes in at 142.50. All right, of this move, which we came really close to here. So 142.50 should offer resistance today on any rally. And it's going to end up being mid-range anyway, you know, in the middle of that triangle. Okay. If we get up here, you know, so I would think that we're going to find resistance there. Again, I don't see any really good reason today that we're going to see massive amounts of volatility. You know, the market might get some movement, but you know, it's not. We might get some movement, but I don't think there's no economic data that's going to be pushing the market, you know, higher or low. We do have some, you know, Fed speak, but you know, it's not like Janet Yellen speaking today or you know, the vice chair either. So just some, you know, a lot of opinions from the Fed governors will be coming out today, but it shouldn't move us too much. By the way, this is something I just saw on. I just looked up and I saw CNBC. It says Axl Rose to join AC/DC for world tour. I literally just paid $400 to go to. I'm going to go see Guns N' Roses in August, just so you all know. So I'll be taking a day off in August because obviously I'm going to have to take the next day off. But yeah, I haven't searched about it and I haven't looked about it. I haven't looked at, but if Axl Rose is joining AC/DC, then is Axl Rose going to finish up the tour with Slash and Guns N' Roses? See, that's the question I'm asking this morning. I'm not really even so concerned about the cable right now. I'm more concerned about Axl Rose. Anyway, oh God. Anyway, let's see. There's the cable. I think. Did we write everything down? Yeah. Here, let's go ahead and put it in range. All right, let's go over to the Swissy. So, if you guys are wondering, yes, I still own a dollar Swiss, of course. Not worried about it. The dollar Swiss, though, has we couldn't capitalize on any real. We couldn't capitalize on any formations on Friday, as you guys know. Fridays are bad days to look for any type of chart formations to follow through. One thing about the Swissy that you have to realize is that when we pushed out of this down channel, okay, and notice that we made this significant rally, what do you notice about the current price action? Okay, what do you notice about the price action here on the dollar Swiss? Exactly. It's a very, very shallow retracement. For those of you that just answer that, it's been a very, very shallow consolidation. All right. And with that being said, that means that if you're here, let's go ahead and remove that. I'm going to use a different line here. It's been such a shallow retracement. Okay. Been such a shallow retracement that if you're on the short side of the dollar Swiss, you've probably got to be pretty nervous. Okay. Now that doesn't mean we won't come down. I mean, coming out of this consolidation, we could very easily come down to this, and this is one thing that I would keep in mind, especially if the euro dollar, you know, pushes to 113.40, 113.50, just to trip some stops. The Swissy may come down here, and if it does, I know we wrote down this number on Friday. If it does, it gets down to 95.90. I think you have to use that as an opportunity to get on the long side. Okay. Now, resistance is at 96, 96.90. There's a 50% retracement. Oh no, you know what? This is not, we're not even worried about that anymore. Oh, here, before I delete it, just so you guys see it, 618, the reason why I've been buying it down here and been wanting to buy it down here for months and finally did. Okay, so you've seen that. Let's remove it. So from here, I believe this was the 618 retracement. It is to a T. Okay, we're close to 618. So if we break above those highs, that means we're, going obviously higher. Pretty good too, if we break through here. So resistance, $96.85. We're still in a range, but obviously you guys know that I'm long. Okay, let's take a look at the yen. So the yen has had a decent recovery. We came under pressure because of the Doha meetings, obviously. We hit the 88% retracement of the entire move. We had this double bottom, okay, and the market couldn't capitalize on it. It was a failure. That was a double bottom failure, which you don't see that often, actually. Double bottoms are pretty, in my opinion, they're pretty consistent chart patterns when you can get them. But you guys know my bigger issue with the dollar yen, nothing's really changed here, is the fact that the dollar yen has not rallied with equities, and that's been my biggest hang up with the dollar yen. That's why I haven't had any yen exposure, and even though I got rid of all my dollar yen shorts last week or the week before last, whenever I closed them out, like down here at 108.50 originally. Okay, yeah, right here is where I closed out my dollar yen shorts from being short, for the last several months, the last couple months, just covering everything up here. I haven't had any yen exposure. I've been, just kind of sitting on the sidelines. I still believe that selling at 110.50 is going to be the best trade out there you can do, and you can get on the long side of the dollar yen down here if you want to. But here's the thing, and I'll say this again, I'm really concerned that the equity markets, okay, are turning from current levels. I think the equity markets are turning from current levels. So I think the lows here that you see that come in at 107.60 or whatever, those lows are going to be breached. Okay, these lows will be breached, and I'm hoping that this happens, but I don't think it's going to. I really think that because, and if you guys don't know what my case is here, I'll just go ahead and overlay the S&Ps. Oh, shit, I didn't want to do that. Okay, because the S&Ps have been so strong that if those S&Ps turn lower from current levels, we're going to break through here. I don't think you're going to be able to stop it unless there's some sort of intervention by the BOJ, and I really don't think we're at intervention levels yet. I mean, you can see that this divergence in the S&P has been huge. Okay, you can see, there it is. The divergence in the S&P has been huge. We've rallied substantially. Dollar yen has not been able to sustain. But this is a very parallel correlation. I have, you guys will ask me, well, Blake, did the correlation break? No, it didn't break. It's just it's divergent. Okay, I'll tell you when it starts to be negative correlation. When it starts to be that, it'll be negative correlation when or if the stock market comes down and the dollar yen doesn't go down. At that point in time, that's when you go, okay, now it's the time to buy the dollar yen. But right now, it's going down even as stocks go up, which means that when stocks go down, which I think they're going to be heading lower from here, when the stock market goes down, the dollar yen's more than likely going to continue to break lower. That's why I'm very hesitant about trying to play these yen pairs on the long side. I'm not comfortable doing it at this stage in the game. All right, intraday, if you can get this dollar yen to fill this gap, this is probably going to be a great place to be on the short side of the dollar yen, right through here, if you can do it. Okay, if you can get the dollar yen back up to 108, 108.75, that would be a great place to be on the short side. 108.75, in my opinion. We are in a bearish trend, as you guys know. Nothing's changed here. We've had it in a bearish trend for like the last 3 months. Support, I mean, really, key support's down here at 107.70, but, you know, overnight was 107.83, so I'll just write down 107.85, but actually I should do this. Okay, those are your two supports for the dollar yen. It's still bearish. Real quickly, let's do the dollar Canadian. Now, you guys know all the reasons why I bought the dollar Canadian. I don't have to go through it all, but you know, we had the butterfly pattern. Okay, butterfly pattern. We had the 38% retracement on a monthly basis. The reason why we marked this number and not that number, this low and not that low, is because this is the last lowest low that we saw. That gave us the that gave us the 38% retracement. We had 127% extension of from that low to that high. 127% extension gave us every reason in the world to be on the long side of the dollar Canadian last week. The Doha meetings happened and it was a failure. Dollar Canadian spiked up. I sold into the strength. I bought it again this morning at 128.76. Okay, I already picked up what I sold yesterday. Yesterday I sold at 129.50. I bought back what I sold yesterday at 128.75. So I saved myself a nice 75 pips on a substantial position. All right, nice little hammer on the 4-hour candle. Yeah, I don't think you'd want to be on the short side of that right now. Like I said, I bought some right where my cursor's at, just before the morning edge. I told you guys about it. Okay. Support is going to be right here, which is almost at that low, but I'll just give it to 128. $128.60. Resistance. Well, resistance now is 130. And as you guys know, because I've said this already, I think we're going to the upper end of this channel this week. So, you know, if you're getting long down here, you know, just targets will be up around 131 by the time we get there. But for today, resistance will be at 130. That's going to be a big round number. I doubt we breach it today. Okay. Oh, wait, whoa, don't need to put the decimal in the right spot. And this is a bearish trend. We are just a counter trend move in a bearish trend. You guys all know that, right? Bearish trend, counter trend move in a bearish trend. We were just getting really oversold last week. All right, I need to drink some coffee. I've just been sitting here talking the whole time, so I'm going to take the next few minutes. I'm going to sip on my coffee and my gin and juice. Joking. And when I come back, we'll do the Kiwi, the Aussie, dollar index, peso, Nordic currencies. Back in a few moments. Thanks for everybody being here. Alrighty, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're going to finish up with our analysis, and let's go over to the Aussie and the Kiwi. So these are the kind of like some of my regrets overnight, is just not covering my Kiwi and my Aussie shorts. So one of the things, and I mentioned a little bit earlier to you guys this morning, I was away from my desk when we got this spike down. Bloomberg reported CPI, and I think they posted the wrong number. They did a misprint, and the CPI came. I think, and I'm making the assumption they probably put -2% and actually came in 0.2%. It was better than expected. So I was in the other room when I saw the Kiwi spike down. I said, "Holy crap!" And I ran over to my office. And by the time I got to my office, it already had ripped back on the correct number. The Kiwi bounced back, and I was just in my position, but when I saw it spike down, I was like, I was going to take some profits. Is what I was thinking. It wasn't because, oh, I knew the number was bad or anything like that. I just saw it dip, and I said, oh crap, I forgot that the number was being released. I totally spaced it, and then by the time I got back, it already popped back. But regardless, I should have taken advantage of the Kiwi at the open because we had gapped down, and I should have just taken some profits off the table, but I didn't. Shoulda, woulda, coulda. I don't live in that world, so the only thing that I do know is we're creeping up towards resistance. The thing about the Kiwi, and I can't ignore this, and I know we talked about it last week, is that this is a pretty bullish move. I mean, we're making consistent highs, okay? Consistent highs and higher lows. You see that? So more than likely, the Kiwi is going to break higher. The question is, how high are we going to go? I doubt we're going to go much higher than this resistance here, especially with the equity market starting to show some weakness. Yeah, and even right now, if you're looking at the equity markets are looking a little, little concerning. But regardless, I don't think we're going to make it, we're going to go too high. But if we do break 69.65, the next logical resistance is going to be at the round number. All right, so I'm going to write them both down: 0.6965 and then 70. Now you might ask me, hey Blake, why don't you say it's bullish? Because we're still in a big range. I mean, this is still a range environment. I mean, look at the daily chart and look what we've been doing the last several months. We're trying to break higher, but we've had limited gains, and we've barely been able to sustain any type of breakout thus far. So I'm a little skeptical of the Kiwi, obviously, which I am on the short side. Okay, now spike lows, that's important. So 68, I'm going to write down 68.50. That's going to be major support on the way down. Okay, that's major support. If we crack that, we're coming back towards the lower end of this channel. But for right now, we're trying to wedge our way higher. All right, Aussie. Oops. Same thing. Last night at the open, we gapped down, and I'm like, I should take some profits in the Aussie. I didn't. I'm still short. I'm short from last week at 77.18. Now, here, let's remove this. Okay. You can see all the reasons why we stopped here. Longer term, if you go over to the daily chart, so we have this big 618 retracement. We've been on both sides of it, for the last month. We've tested it. We've been above it. We've been below it. We're back above it again. But the 618 retracement on a weekly basis is really here at 76.50. All right. 77.20 has capped us. We haven't been able to get much above that. 77.30, 77.35 was the highs over here. We just tried to fill the gap, and I think you could arguably say we just filled the gap in the Aussie. Okay. Now, if you guys want to be on the short side of something, this is probably not a bad short right now, just in my opinion. Okay. But key resistance comes in at 77.35. I'm going to write that down. 77.35. This is key resistance. And support. We should be, well, this is a here. This is let me delete this really quick. And let's move this down here. Okay. Zoom out just a little bit further. This is a zone, if you ask me. All right. Let me grab, you know what I need? I need this over here. I want it right. This doesn't, this can go down here. Let's go over here. Okay, this is easier. Because I want to be able to see these. Okay, so this area right through here. Okay, I'm gonna box it in. Ready? See this? This is all really key support through here. It's a zone. Okay, that's a zone, and that zone, in my opinion, is going to be all support through here. All right. So any dip down to anywhere 76.50 to 76.30, okay, support. It's that zone area, okay. Let's go over to, oh yeah, it's a big range. Dollar index. Okay, so here's the Dixie. Let's go over to the 4-hour. This dollar index, and let me grab that, and do this. No, I don't want dotted. No dots. Damn it. Okay. So, Bill said, I'm a riot going to Guns N' Roses. You know, my wife, she makes me go to Michael Bublé. I'm going to make her go to Guns N' Roses, damn it. last time I went to go see the Cult, it was like, you know, a while ago. I'm not a big concert person, but, you know, I grew up with Guns N' Roses, for crying out loud. You know, so I'm dragging her to go to she's like, do I have to go? I'm like, yes, you have to go. Oops, I don't want that. Oops. Where's my magnet? Where'd my magnet go? Where'd my magnet? All right. It's I don't want the magnet on. All right, it's being a pain in the butt, but that's it. But you get the general picture here. So what that means is, okay, we have support right here, and then we have resistance right here. Okay, so support is at 94.50, resistance is at 94.85, and if we break 94.85, we're going higher. All right, so if we break this, no thank you. If we break that, we're going higher. So 94.85, 94.50, 94.50, excuse me, 94.85. Grab a drink. Just give me 1 second. Okay. All right. There's the dollar index. Let's go over to the peso. Here's the peso. So the peso basically filled the gap. We gapped up higher. I was profitable in the U.S. dollar Mexican peso. When we gapped up, this is one of those other ones. I was like, man, should I sell it? And I'm like, because you guys know, I'll say this again. You guys know I'm long the peso. I'm long until we get to about here, and then I'm going to short the living crap out of it as soon as we get up here. Okay, somewhere between 1820 and 1850, I'm going to sell. I'm going to sell the peso. I'm just not doing it just yet. I think we're currently trying to rally here. Okay, now nice little hammer forming. So the gap fill at 1755 is support. Resistance will be the spike high, which will be 1775. Okay, US dollar, Mexican peso. Support at what? 17.45. Resistance is 1745, right? Yeah, right there. 55. I'm sorry, 1755. 5. Resistance 1775. 75. Okay. US dollar, Norwegian krona. All right, here's the US dollar, Norwegian krona. Bounced right off of trendline support. We actually gapped up thanks to the Doha debacle, we can call it. And we gave back all of our gains and then some, and then we bounced. So that means those lows are significant today, which will come in at 823. Sold half of my Norwegian krona last night too when we were up here. Remember, we're in a down channel. I thought we were going to get stopped up at 830, but we gapped above it. So if we can break above those highs, if we can break above these highs right here, that should allow us the ability to make it back up to channel highs. All right, so that comes in at 830, basically 832. I'm gonna write down. Now I've wavered between putting this in a bearish trend and a range. I keep going back to range, and the reason why is because if you look at the longer term charts of the US dollar, Norwegian krona, yeah, we're in a head and shoulder pattern. Yeah, we've come off the highs, but really it's still a very bullish trend, any which way you slice it. Okay. All right, Swedish krona. I'm still long the Swedish krona. As you guys know, I bought it last week. I bought it down here at 807. I'm still long. We have to break above 818 to get any type of bullish momentum. 818. That would be key. Support right now is 810 is what we wrote down last week, right? Yep. And remember on Friday right here at the morning edge, I said, hey, if we dip down to 810, that's going to be a good long, and I drew it out for you. That's exactly what happened. It went down to 810 and bounced. So now I can get rid of this. We drew that on Friday, if you don't remember. Okay. 810 would be still support. Remember, we're at the lower end of our longer term range here in the US dollar Swedish krona. That's why you have to be very careful being on the short side down here. We break above 818, and that'll unleash a lot of upside in my view. All right, so there's your bias chart. It is finished. It looks like I got a lot of new listeners that are in today. So first and foremost, I'd like to welcome you guys to the Morning Edge. I've been broadcasting here